Good afternoon, Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with the Streets Options Profits, and together we bring you our monthly update. And what a great day to be back, Scott. We went through all-time highs in the Dow, and this market has just been on a pretty consistent uptrend. But going into trade today, you said there's three things short-term that could happen.
Yes, and it's very important based on your time horizon. We've talked so many times over the course of the past few years that equities are far from dead. It's all about your time frame. It's all about your approach. So coming in today with all the headlines about Dow Jones all-time highs, S&P potentially 2013 highs, there were three different scenarios in how we would deal with those highs. So I think in the S&P we've been talking about 1530,
right,
and on the Dow it was like 14,200. So as of right now, because we're doing an intraday call here, we are above the 1530. I'll just go right to the chart. You will see right here on the SPX. This is where we traded through. This was your pivot. So anyone that have been shorting this entire ascending channel, they probably got squeezed out. And anybody who's been behind the curve or not creating alpha or not involved in the market, they might be chasing today. So
right, for
us, we use that method, trim and trail. So into the strength. You take some positions
right
off in profits, and then you stay with some that act well.
Well, one thing you've been talking about for the past year is tactically trading and using portfolio management to handle your funds. And I think it's really interesting because now we have traders looking at the 1550, 1560 level in the S&P, because another trend that I've noticed is that it's doing a little bit of back, a little bit of fill, healthy consolidation, as you would say.
Right, so if you want to talk and look at that level, go back to the chart, we'll go to the monthly chart. You go to the monthly chart of the SPX and you'll see we've talked about this also. Now we're getting into some macro areas. If you look at this double top in the S&P, that's your 1550, 1570. So I would say if we close above 1530, right around where we are now, we're going to be testing this area. Could be this week, could be next week, but overall, it's really your approach, and equities aren't created equal, which we'll go
right
through in this call, but there's been a lot of money to be made if you don't have opinions.
Well, that's what we do, where we do everything on relative outperformance. And one of the correlation indexes that we've been taking a look at, the JCJ, is around the 53, 54 level. And what we look for there is trading between 50 and 70 to see if we're in a low correlative environment. And that's what we're looking at right now. So like I've been saying, like Stephanie has been saying, like we've been talking about all through 2012 going into this year, it really is a stock picking environment. When you see indexes like that confirm it, which is
right,
what we look for. But quickly, let's go into the three things you needed to see happen to help determine what kind of move we're looking at short term.
Well, you wanted to see some leaders break out, and we, morning call we've been talking about Google at historic highs. Want to go really quickly to the chart here. You'll see, boom, very, very healthy. One of the halves following the 8-day moving average all the way up, boom, breaking out, another great day. We've talked about Netflix. Netflix also, but let's do LinkedIn first. That one also, great earnings, awesome pattern, boom, two highs. Okay, before we get into the rest of it, you want to go back to some ETFs. You talk about people following the transports. Transports broke out yesterday before this move today. So with that said, there's been so many things that have led us in this direction, and they haven't been perfect. People complain about the volume. People complain about the lack of participation.
Doesn't matter at the end of the day. Pick your spots.
Right.
It doesn't matter.
Yeah.
Let's take a look at the Qs, because on a relative basis, they are not performing as well as the S&P and the Dow have been.
Well, what's interesting about tech is that you had to be in individual names, because there are so many other ETFs that you could have bought it. You could have bought the XLF, you could have bought IYT, you could have bought XLI and made a lot of money, but if you bought the Qs, you're in the same spot because of Apple. Right here, the Qs finally broke above this area, but look where it is. It's below the September highs. You're not even close to historic highs like some of the other ETFs. So if you wanted tech exposure, it hasn't been in the Qs, but overall, today it gapped up. Now, I think would be interesting to see, can they protect this gap in the next week or so? If all of a sudden, it holds here and goes sideways, perhaps, technology gets a little bit better, and that probably means that Apple builds on this first day bounce, which we'll get into later.
Speaking of tech, let's go and dive into some of our individual names that we really love. Taking a look at IBM, Scott and I have always, just about every morning call that we did on a weekly basis, we spoke about this name. Riding some tremendous momentum from the analyst day last week. We think here that they're going to blow away earnings numbers, particularly through 2013. Revenues are going to continue to climb, and we're also going to see the expansion in margins. This is all about growth in services and analytics, not simply using cash to increase dividends or buybacks. They're investing in growth and firing on all cylinders. This is my favorite core portfolio holding.
Now, you've had very nice conviction here, because I haven't had as much. I've been just trading it here and there. I wasn't sure about Europe and the whole public sector, and they missed 2 quarters ago. But P.S., you look at the chart here, and if you stayed the course, you did really well. Here's the gap up on earnings. It came in probably long, a little bit more than people wanted to, but then it slowly regained its composure. And then this was a nice trade, which you talked about above 202. Now it's coming a little bit off the highs, but I think it's no big deal. Just look at the move that it's had. So with that said, I would say if you missed IBM and you want to buy it back, I would say make sure it could retest and hold this 203 area. That would be where you can enter. And then overall, you're right. It looks healthy. Looks like if the market's going to continue, IBM is one of the chosen ones.
Well, I just think it's a leader from not only a chart perspective, but fundamentally as well. Everybody wants to be in the sweet spot where they are. Moving along to Apple. Now this one, I find it really interesting that regardless of the performance of Apple, the market has held really steady. We've seen some significant performance here. A couple traders I've been talking to are like, we're not even bothering with it anymore. It's dead money, and we're picking and choosing our spots where there's been some significant momentum.
Right. The market's been ignoring Apple, I think, for almost a month, and that's been healthy. A lot of people have said, oh, I can't buy the market because Apple's so weak.
Right.
But meanwhile, the market's gone up. And I know for me, who I've been trading it pretty much on and off my entire career, lately I've been kind of avoiding it and only taking small trades, some bounces. We've had a few that lasted a few days, and then even yesterday I didn't trade at all. But today was interesting. It was up pretty significantly. Supposedly Goldman came out and said it's the cheapest stock that they cover, and it went to resistance. Let's just look at the chart, and now it's pulling in. I think some traders are probably pulling their hair out right now as we do this call here, because you've had a huge trend to the downside. Enormous. Okay, here is that high. Here's where it broke, 681. Here's where it broke one of the trend lines we talked about. Here's where it broke the 200-day, and then it hasn't been able to get back above this since. And then finally, it broke below this 435, okay, which was right here, and you had a 2-day down move. So today it bounced. You take a closer look. It fell. I tweeted today saying I probably will, see some resistance right around this 435 where it failed from, and now let's see if it goes sideways. If it goes sideways and can't get back above that or get above this downtrend, like you said, it's dead money, and it's just frustrating because there's no commitment to it, and every time it looks good, you feel like if you saved yourself 35-40% on the downside, you feel like you saved yourself money and you could catch something, but meanwhile it still isn't acting well.
But I think the trading in Apple is probably the best lesson that any of the T3 traders will ever learn, because this is one of those names you have to take the emotion out. You have to separate the fact that people have made careers on trading Apple and they've done well, and you also separate the fact that I love my iPhone, I love my iPad, but we're trading stocks, we're not trading the product. So I think this is one of the best lessons that your traders could have learned. Moving along to Google, this is one of the names that I liked. It was Scott's 2012 pick in the tech space, and I think you did a great job with that. This is one of those names operating on multiple verticals. It's not product dependent. Yes, costs per clicks are down, but they're focusing on that key area like mobile, and they have the exposure to emerging markets, which was one of our themes for 2013.
Yeah, and it's giving you a lot of different opportunity on every time frame.
Every squawk that breaks in, new high Google, new high Google. It's unbelievable.
Yes, and when they put the $1,000 price target, I got a little weary, but meanwhile it held 800. You look at the chart here. The reason why I love this, when we talked about it as our play of 2012, was because of this long-term channel. For years, it wasn't getting above it, and it was only searching, like you said, it's very vertical now. And then this was your price point. When it broke above 650, it gave you a really nice move. And then this year is when it broke above last year's high of 763-ish. So now you take a closer look. If you only trade it tactically, it's been following the 8-day. You had a nice gap up on earnings. Guys have been trying to track it and stay with it. Then finally, I know I was involved for this nice little, 2-3-day trade when it broke above the 800 through 808. And now, into 836, I wouldn't be chasing Google here. I'd be trimming it. That's why we say trim and trail. You want to sell some strength, so this way, if it does pull in again, you could embrace it versus be scared of it. And at this point, I don't think you could chase price there. All
right, let's take a look at LinkedIn. This is one of those names where it's proving that want ads are actually working. So, and this is one of those IPO names that you kind of taught us the pattern how you need to trade this, and it's been a true outperformer.
Well, this one, was part of the three amigos that we talked about. We talked about Coors, Dunkin', and LinkedIn as three potential new issues to track that have macro investment capabilities or potential. And I know going into last quarter's earnings, unfortunately, I would love to have owned a lot of the stock. I had a call spread because I figured if they come in there, the ingredients will be explosive. You look at LinkedIn, and boy, was it explosive. This is the highs from the IPO, broke above it, boom. Okay, today it's having an off day, but rightly so, it deserves it. Let me try and get it in here so you can see it a little closer. Here is LinkedIn. Here's your gap up after earnings. Then, consolidated another nice little add-on play. And then today, it's trading off, which is just funny because today the market's strong, breaking out on LinkedIn, which has been a leader, is coming in. So maybe you trim and trail it. And as long as it stays above the 8-day, I still think that this trend is very strong.
All right, and let's wrap it up with Facebook, the other IPO. Well, certainly made headlines for sure.
Well, Facebook, it's been one of those problem stocks because there's a lot of loose shares everywhere. There was a new issue, it wasn't priced right, the investment bankers were a little piggy. They had like 10 different rounds to get it too high, and then the botched NASDAQ, whatever.
Right.
But I think the overall pattern is getting a little bit better. You look at the chart here, and you will see that here is where the botched IPO happened, and then right around here I got very excited about it to fill this gap, and then hit a nice trend back to resistance. So since then it's been slowly pulling back, but I think ultimately, I've said it many times, I don't think the higher the year is on Facebook. At this point, you had a nice little reversal right here in this 2650 area. Now, if it were to finally get above this 28, just say 30, and hold above it, I do think that some guys would get a little bit more confidence that at some point it could take out the more macro resistance, which still comes in right here around 32. But right now it's holding in there. I would have rather been a little stronger on such a on a day like today, but
right.
I don't think that you have to watch it so close that it's more of a macro.
But you're also
scenario.
hearing a little bit more chatter of constructive buying here, even from the fundamental perspective. You're starting to see some people coming into the market.
I do, and I'm in some, and,
right.
I want to add to it, but it feels like every time I add to it, it ruins my price. So I'll wait and see, and my next price will be higher. I think that's where buyers will be higher.
All right, we'll have to pay attention to that. We're going to jump into a quick commercial, and when we come back, we're going to look at some of our favorite retail names.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Welcome back to our monthly recap. We're going to kick off the back half of this with some retail names. We're going to take a look at TJ Maxx, and this is one of those names where you really look to identify some outperformers here, growing earnings, growing revenue. Their margins are one of the most healthy within the group, and their customer base continues to grow. In fact, last week, I normally never ever go unhedged, but I was selling some puts on it because the implied volatility was a little bit elevated, thought the price was sort of attractive, and they just keep continuing to blow the numbers away. So collect some premium. Should I get assigned? I don't mind owning it a little bit cheaper. And that's really what I've been looking at. I think out of all the names within this space, this is going to be one that's consistent for the year.
Well, retail in the last, I think, 4 weeks started to act much better. In like December, got a little wishy-washy. I think it went down my game plan sheet, but lately it's been acting better, and I'm looking at the chart at TJX. It looks good. It's above the 8-day, above the 21-day, knocking on resistance here. It's not at new highs like some of the other real leaders, but I don't think it has to be. As long as the market keeps broadening out, I think it'll be all right. I think if it gets above this 45, 44, you could see some motion to the upside back near the highs. I think that this is the level that you want to trade against if you're short-term 44.75. But overall, technically this is acting well. This nice igniting bar put it back in the game, and as long as it stays above this area and shows commitment, you could get another trade there.
All right, let's spend some time on Macy's on the chart in particular. This was featured in Off the Charts last week. What were you taking a look at there, and how has it performed since then?
Well, Macy's has been acting better, above all in the moving average, showing relative strength, and it's been something to stay with. And it's at 52-week highs versus some of the other retailers. So you look at Macy's right here, you look at the chart, really nice, long, just say this is your channel here. This was your downtrend that broke above. At this point, I would say it's hard to chase Macy's, but this was the area that I think we were looking at off the charts. We wanted it to break above 40 for a trade, and here we are close to 42. So it's extended from the 8-day and the 21-day, so it's always hard to buy when it's extended like that. But overall, this has been helping lead the way in retail.
You know what I find really interesting? We're going to take a look at Coach versus Kors next, and this is what's considered the luxury market in the stock picking world. But some of the other media work I do where I focus on extreme high-end luxury brands, privately held jewelry companies and homes and so forth, they're not seeing any spending changes despite what's going on in the macro environment. In fact, they're increasing their business. Lower-end names like TJ Maxx and Macy's are doing well, but Coach, horrible after disappointing earnings. Kors, even though I like it, feels like it's sort of done. The only reason I think Coach has gotten any sort of bid here is because you had the takeover spec running around.
Right, and also just off the bottom trade. It was
Right.
very oversold, but overall Coach has been a broken stock.
Right.
And you look at the chart here of Coach, and I was just looking at it, you did have a little bit of an oversold bounce from 46. Look where this stock has come from. You know, we've talked about it being a broken stock for a while. This is when you had that head and shoulders top pattern that broke to the downside. It looked right around here where it rallied to resistance that it might get going, and it failed. And then you had the earnings, and it's working its way back to the gap. I think this is just a trade. This isn't an own. But you talk about cores, I think that's a different story. It's still in the game. It still has a lot of institutional interest. It's been a phenomenal vehicle since the IPO. Look at that. We've talked about it so many times. Here is your last time that it consolidated, gapped above it again, went sideways, broke above it. And recently it's been a little faulty because of that secondary that surprised everyone. Look how unbelievable that looked on the highs there before the announcement, and that, you know, it sucks the wind out of traders and people. Here was your red dog reversal right here, which we talked about. This was 57.85. It's looking a little bit better today. So I do think that cores, for a high beta retail name that is one of your new issues, you know, it's still in the game, and it's just a little bit slower because it's still, you know, I think institutions are just upset, or actually they were in on that, but the traders that took it out, you know, they still have some battle scars.
Right. All right, let's wrap it up with Walmart. And this one, I remember looking at this one with you over the past couple of years, and you're like, Joe, look at this 10-year trend, and it's going to certainly move in 2012. And it was just unbelievable.
It worked well. It was the same segment, I think, with Sullivan, with Google, and Walmart. And the reason being, not because I shop at Walmart, not because I love Walmart, is because for a decade, price was in a consolidation that was accumulated. And if you look at that real quickly, we've had a few different trades in Walmart. This was right here, you know, that this overall, you know, I'll go to the monthly real quickly, then I'll get away from it. This was this huge decade-long channel. Okay, so once it broke above, we talked about 62, you can get a move to highs, and there it went. You go back to the daily chart. Recently, if you're on my virtual trade floor, you saw I got long it a few days back because it looked like it was going to break this downtrend right in here. Remember that email that everyone got spooked and the market didn't go down?
Right.
You know, which told you something about A, the stock, and A, the market, that the market's that strong. You know, so right here was your get involved. I think we had it in off the charts at 72, and now here it is at 74. I did sell it, you know, and at this point, it's fine. That was a nice trade, and, you know, it's helping lead the market. So if you want to stay with Walmart, stay with it. Also, you look at Target, unbelievable. Look at when this broke this downtrend, you know, and it also had earnings that people said weren't enough, and PS, it's at historic highs. So again, shows you could pick and choose where the relative strength is, and you can pick and choose your time horizon, and equities are far from dead if you find the right approach.
Agreed, 100%. Catch Scott at the end of the day every day on T3Live.com. Options, Profits, Real Money as he wraps up the charts for us. And you can catch me and Bob Lang of Real Money next Wednesday, March 16th at 6 p.m. as I run through a whole bunch of new trades in my favorite space to trade, the Ags.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.